Hi, everyone. Can you hear me? Brilliant. I was just checking to see if David could hear me, as we had a slight issue with our microphone this morning. Anyway, welcome to the second of our webinars. I know some of you were with us this morning, so hello again. If not, it's the first time you're with us today. It could be that this morning you were still sleeping and you were in a different time zone, but wherever you are in the world, welcome, and we will be moving to the charts very shortly. But as always, as you know, please can I draw your attention to the disclaimer that I know you can see on your screen. Please don't ever think of trading. Trading is a very risky business, so please don't ever think of using money that you cannot afford to lose. Right, that said, what we are going to do very quickly is, obviously, we're going to be looking at the charts, and I have the right slide up today. We're going to be looking at the charts through what we call the prism of volume price analysis. That's price action and volume, really to see whether what we're seeing is authentic or not. Is it genuine, or is it a trap? And also, what we also look in VPAs, we look for those anomalies, that combination of price action and volume, which is not as it should be. And again, that is to stop us getting trapped on the wrong side of the market. Sometimes it helps us actually get out of trades. All sorts of it gives us all sorts of information on the price action that you wouldn't get simply by looking at the price action. VPA is also candles, candle patterns, support and resistance, hugely important, and of course time, and not just time on the time chart that you are trading, but also looking at multiple time frames. And with the time frames, with what I've got to show you on my MetaTrader 5 platform, is actually using a non-time-based chart. I've actually got a Renko, and the reason I've got that is markets are very volatile at the moment, as you know. So having a chart where it absorbs all the fluctuations, all the maybe the volatility, it can actually help you stay in a trade and also highlight when the trade is likely to reverse against you. With regard to VPA, the volume book, that is the principal book. It's been translated into two versions of Chinese. It's in Japanese, and it's due shortly to come out in Vietnam as well. And I have to say, both David and I were hugely proud of the fact that so many traders now have read the book and also have incorporated volume analysis into their trading and investing. I know we talk about trading in these sessions because we're looking at day trading, we're looking at shorter time frames, but the methodology is perfectly valid for investment purposes as well. What we've done is, to accompany the book, there is a book of examples. It was one of the things that a lot of traders and investors asked for, which was the main book explains that outlines the concepts of VPA, but was there a book which had some worked examples? So this one accompanies the book, and it focuses on stocks, indices, and some commodities, but there's also a version for Forex as well, because the good thing about what we see on our charts is that patterns repeat, and patterns repeat because as people, we repeat. We tend to, on the negative side, we do the same thing over and over again. It's part of being human, as it were. And what the market is, what the market is picking up, what you're looking at when you're looking at a chart, you're looking at the behavior. You're looking at the behavior of your fellow traders, your fellow investors. What drives people to buy and sell? Well, that's a whole topic on its own, and it's certainly covered in the book. Because the whole concept of volume price analysis is that we are looking at the charts from the perspective of the insiders, those in institutions, those groups of people who not only who are legally obliged to make this market so that we can participate, but then at the same time, they know all our faults and our foibles, and they take advantage of that for their own benefit. And maybe you saw the article a couple of weeks or so ago where JP Morgan has been going to be fined almost $1 billion for what's called spoofing. Spoofing is something that really goes on between them, as they were, because not only are they out there making the market, but they're also sort of playing amongst themselves as well. Anyway, markets, my goodness, I have a laundry list of what we have to be aware of and what is actually going on at the moment. Very quickly, let's just start with something just very straightforward. Let's see what's happening on the news side and on the fundamental side. Today, obviously, this is almost quite boring in a way. We've got the Fed minutes, which would normally, be at the top of the list in terms of, what traders and investors, would be concerned about on, today, as it were. But we all know what is going on in the background, not least what Donald is up to, what his Twitter storm from yesterday managed to upset the markets. They have come back and they appear to be rallying quite strongly, primarily because he torpedoed or he pulled the talks that were going on between obviously the Democrats and the Republicans on a new stimulus. This would be a package that they were trying to put together to get individuals and companies through the fallout that we have from the virus. He actually said, no, that's it. All bets are off. That's it. It's all done. I'm not having that, not until after the election. But actually, he's come back, and there are bits of it which apparently he is able to sign off. And I think the one that's been coming through, certainly I've seen, is the one on the airlines, some sort of bailout, and apparently that's caused the airline stocks to rise. I was a bit worried when he sort of starts typing in capitals. You think, oh my goodness, whatever next. And I have read he's now on steroids, so there was pounding his keyboard. Yes, exactly. Anyway, so as you can see through the news feed, obviously here in the UK we've got Brexit. So those of you who are on trading forex at the moment, obviously the British pound, we had a burst of volatility across the pound sterling pairs. Where are we? Yeah. And obviously, to go back to the news, what have we got? Well, we've got the EIA inventories. Let's have a look. Canadian. We've just had the Canadian Ivy. That's just come through. There we are. So life is carrying on. In terms of fundamental news, but it is all dominated at the moment with the election. What is happening? Tonight there is a debate. The vice president is debating the potential vice Democratic nominee, Kamala Harris, but that is after the bell, so that's after the physical market is closed. But you'll certainly see a reaction in Globex. And there's one other item of news which kind of has I've lost that. Where is it? Here we are. I just wanted to highlight. Here it is. This is something, again, as traders, we, not only do we have to look at the charts and we have all the, what is hitting the market in real time. As I said, Donald's Twitter feed, you've got the fundamental news, but there's stuff that is bubbling on underneath, and it's, slightly longer term. But this is quite interesting. This is the report from one of the committees on Capitol Hill, where basically they are going to be looking to take the companies such as Facebook, Google, the sort of FANGs, if you like, the companies that have been driving the stock market, and going to apply what they call their antitrust legislation. And that is really when you have monopolies. Anyway, it's something to bear in mind. It's just one other thing that we have to consider. So I think that's my David, have I missed anything on that? Because I've run out of right. Going back to the charts, let's have a look. I said earlier, putting together a combination of charts, both time-based and non-time-based charts. And what I've actually done today, I've actually got the version of the YM, which is the US 30 cash. It's a sort of synthetic contract that you can trade on, I think, practically all MT4 and MT5 platforms. And it's great because it means you don't have to have a futures, you have to fund a futures account. And what I want to start with first, to have a quick look at the daily chart first. Let's see what the kind of context we are. Well, the daily chart here, obviously that was yesterday's big fall. It actually took the price action straight back to what we call the volume point of control at 27,684. The values you see on these charts may be slightly out to what you have in the futures market. As I said, this is a contract that's been put together by the broker, so you'll always have a slight variation, but not by very much. And certainly for placing, for trading it on these platforms, it's not going to make a huge difference. This is yesterday's fall, and we look as though we are going, we have actually retraced. You can see the extent of this candle. Not a lot of volume under that so far. So, who knows? By the end of today, that could come all the way down. It could carry on further. Obviously, support and resistance levels will come into play, and what will happen tomorrow, we will wait and see. So, but what this tells us is that we are broadly in a range. It may be a very wide range that we can see here, and certainly the daily candles, there have been sufficient in there to have some really nice trading opportunities if you're in on the faster charts. But it's certainly not in a strong trend. If we look at a trend over here, then we had congestion, then we had another trend, then we had the reversal with volatility, the trend lower. And it's something to be aware of, looking at what I call the structure of the chart. Clearly on the hourly chart, we are now in a trend higher. We've almost had a V-shaped reversal from yesterday's major fall. This is obviously over on the Globex session, and so the price has moved higher. So that gives us some context of what we're seeing. Going back down to the faster time frames, let's go down to the 3-minute chart. What we have here now, what has actually happened is the volume point of control, when I first started looking at this chart, was actually here. And this was it was in congestion. It was kind of moving, but it was waiting for the start of the physical open, the cash market. Markets will do that. Looking at a chart, identifying, everyone tries to look for trends. Everyone tries to think, oh, where's the trend? Where's the trend? Actually, what you really need to look at is you need to look at the congestion zones, because congestion is where trends start. They will reverse from a congestion phase, either at a distribution or accumulation point, or from an area of the chart that we call when you have fair value, if you like. It's the market is happy to transact in this particular range. Now, as I said, that was down here. This is the open. Obviously, you have the volume surge, which we would expect. We had a volatility candle triggered, as we know, because we had the volatility trigger on these little purple dots here. What that means is the range of this candle was outside the average true range for this time frame for this particular instrument. And what tends to happen is it retreats to within the spread of the candle. Now, when the market first opens, it's really pretty much down to you whether how long do you wait until maybe the initial volatility calms, whether it, how long? There is no right answer. It really depends on what you see in the price action, the kind of volume you're seeing, and obviously you're going to see a lot of volume anyway because it's the open. And to help you make a judgment as to whether you feel possibly it's, again, it's down to the time frames that you trade yourself. This is where I would suggest you look at having as I said, a non-time-based chart, particularly the Renko. David has 3 versions of Renko, and you'll see when we move over to his screen. But essentially, what we're looking at here, each one of these bricks, I've actually set, it's about 5 points. With this indicator, you can set it yourself, or you can let the indicator, you know, give you a value. The value that it had offered me, I felt was a little bit too much, so I actually cut it down to 5. And you can do that certainly on NinjaTrader as well. But you can see here what Renko does. It takes away all the whipsawing, the choppiness, so you get a much cleaner look at the price action. You also have support and resistance. This is the one that's just based on price here. But you see the congestion phase that we had here. It was actually moving higher, as I said, from yesterday. This was the kind of V-shaped reversal, but because just ahead of the physical open, markets will tend, or before a major news announcement, it will always go into a congestion. So you see the congestion, you see the change in color in the trend monitor. You think, do you know what? I know the opening is coming. No, I'm possibly going to go up, but who knows in these uncertain markets, as it were. And you wait, and really it's a very simple calculation you have to make. You wait until the trend dots turn to this bright blue. It's matched with the blue of the trend monitor, and you then look at your support and resistance. You know, once it's cleared any resistance line that you see on the time chart, and you can possibly think, well, maybe that's a reasonable entry. Now, the nice thing about when you use congestion zones as for a break, as it were, you have the market tells you where your stop loss is going to be. So you can be very aggressive. If you have the VPOC, you just put it below the VPOC, or you look at the last sort of line of support, as it were. What that also does in this particular instance is that when we were on the 3-minute chart and we had this volatility trigger, and we often say with the volatility trigger, it can be a time to actually close out, because you do get this retrace to within the spread of the candle. You could get a congestion, which we did with 3 candles, and then it will either reverse or it will carry on in the same direction. Now, with the Renko, that actually held you in. Now we've come to this point here where we came to yet another, as I said, we moved away, the VPOC moved up, we had another little period of congestion. And moving back to the Renko, what happens here is you obviously have red bricks. We had a change of trend dot. The trend dot has a 3-color phasing. It has obviously the blue for up, the red for down, but it also has this gray, which appears obviously in congestion phases. And we have the pivots. We know we are in a congestion. Now down here, we haven't gone into bright blue. And as I said this morning, you can either wait until it goes into bright blue, or you can say, do you know what, I'm coming out. It very rarely does this. It very rarely goes from a bright to a bright color. You always get this in-between color, as it were. That's a decision that you have to make. Or if you've caught that, you would say, if you are in with multiple contracts, you maybe take some out and leave, 1 or 2 to run and see what happens. Now that would be a great decision, because we've actually, we're powering higher at the moment. Moving up to looking at the levels, what I've put on here are, let's go up to the 10-minute chart. Let's go up to the 10-minute chart. The levels that you see here are based on our Camarilla, but you can, whatever, system of marking your levels up is entirely up to you. This is the Camarilla. This is based on 6 levels. The encouraging thing with this was, again, there was a volatility trigger. This is on the 10-minute chart. Retrace back into it. We've now had another volatility candle being triggered as well. But once it got through the R4, what it tells us is, well, where is this heading next? Well, on this time frame, logically, it is, that's where you could realistically expect for it to go at 28.289. And certainly, if Donald tweets out some encouraging news, then the chances are it will get there. But the way we've developed this indicator is that once you put it on the charts of an hour and above, the values that are given by the indicator, they last for the whole week. And when we talk about support and resistance, levels on the slower time frame always do carry a lot of weight. They carry, they're stronger, they're much more significant. So what's interesting about the hourly chart is that it's actually hitting the R4 at the moment. So it will be interesting to see whether that can actually move higher or not, or whether that will cause it to have a pause. Now that pause will be maybe a congestion, a pullback, a retest. The R4 tends to happen like that because it's one of the important levels on the Camarilla indicator. But I thought this was really a really nice piece of price action because it had a lot of the concepts of, as I said, volume price analysis, not least the looking at trends, looking at congestion, how to use congestion, how to use introducing a non-time-based chart. And then, this is what will help to keep you in, but you know why possibly that is pulling back all the time. The bricks will expand like this when there is a lot of activity, a lot of volatility, but they will always snap, once the 5 pips or so have gone through the market, it will close off. So I'll be watching that. What I've also done here is the Dow, the YM, the Dow, it has its own volatility index that you can watch as well. It's not very not quite as attractive to look at as the VIX, the S&P one. But so this was the spike higher, obviously yesterday, and we're back down to the 28. But if you want to follow volatility, excuse me. Apologies about that. You can simply follow the VIX, which is, strictly speaking, it is the CBOE volatility index for the S&P 500. As I said, there are volatility in indices for both the Dow and the Nasdaq. When the markets refer to the volatility index, they tend to refer to the VIX, and you can have this in multiple timeframes. And what you want to see is if the market's going to go higher, you actually want to see the VIX fall. And once it starts to rise, then the markets are likely to be reversing. So interesting, interesting point for the markets. Lots of movement, lots of volatility, but as long as you have what you're looking at with regard to volatility, and certainly you have our volatility indicator, which will tell you that something is dramatically afoot. Look at your support and resistance levels. Are they, and we can see here there has been a pause at the R4. We know that, we can anticipate that, and you also use these levels as potential targets. So knowing that, as I said earlier on, knowing that I had the R4 here, but it was much, once it had got through this one, then you could say, well, do you know what? Yeah, I'll wait to see. If it does go through, great. But you have to expect that the chances are it may sort of retest or congest. But, as I said, if Donald comes out and, I don't know, signs off something else, you just don't know. That's the kind of market we are in at the moment. Let's have a look at what the news is up at the moment. Let's have a look. We certainly, gosh, he's been busy, isn't he? Right, okay, fine. I think, if he doesn't get in, or I'm not going to, there's plenty of people with lots of views out there whether he's going to get in or not, and I'll wait a little bit longer before I give my own view. I think the media is certainly going to miss him because it gives them, endless lots and lots to write about, doesn't he, David? There we are. Here we are, a mixture of capital. Oh dear. Let's see what happens, and let's focus on the charts. If you've got any questions, please just pop them into the chat box. I'm more than happy to answer them, or either on air or I'll type in an answer. But let me just pass over to David.